Now it's time for our weekly energy update with Dan McTeague, President of Canadians for Affordable Energy. All yours, Dan.
Well, thank you very much for that, Teresa. And here we are, mid-October. A lot of news events happening globally and domestically. Some related to energy, others eventually will be related to the energy price. Interesting to note that the Parliamentary Budget Officer has finally confirmed that increases in fuel prices, like the carbon tax, do have a direct impact on inflation. And we're going to find out a little bit more of that this time next week, probably Tuesday or Wednesday, when the Bank of Canada is expected to drop interest rates 0.5% based on, you got it, gasoline prices being down September 2024 versus September 2023. And the good news continues, because anybody who thinks inflation is just sort of one of these things created outside of energy is deluding themselves. We're going to see a similar narrative probably by the mid part of November, I would say the 12th or 13th of November, where gas prices for October of 2024 were in fact lower than October 2023. And that's really because, as I've mentioned before, gas prices and energy prices are significantly lower than they ought to be given the supply and demand fundamentals. But we know that this is no longer a market about people trading oil and gas and commodities. It's really about financial investors. It's really about hedgers, money managers who've been shorting deliberately this commodity. And what they're doing is they're ignoring fundamentals. Supply is low, demand is high and very strong. And except for what the never reliable data coming from China, and I say never reliable, most are now having to start to admit, even the woke green climate infused energy International Energy Agency, which can never get its numbers right, is now having to admit, throw the towel in, that 2025 is going to see a pretty significant drawdown in inventories. What that means is that we're looking at across Canada prices that have dropped about, or will be dropping this week, an average of about 3 to 4 cents a liter, maybe even more, based on potential for a lessening of geopolitical tensions in the Middle East, but it completely ignoring, of course, fundamentals. And of course, the idea that, suddenly we get news this morning suggesting that we may have an El Nino that's going to be a little stronger than most anticipate in the Northern Hemisphere. We're going to see colder temps, which means greater reliance on propane, natural gas, and of course, heating oil, which means diesel. So look for those prices to go up, especially come December. And although we're getting ahead of ourselves, the week ahead for the country looks pretty good. I would say Vancouver, you're moving from about $1.77.9 on Friday down to about $1.72 to $1.73 this time next week. Much of BC following in the $1.68 range. The Alberta, Saskatchewan situation will continue to drop, maybe about 2 cents net a liter in Alberta, down to about $1.37, $1.38 to $1.42, depending on your Calgary and Edmonton. Saskatchewan, Regina, remaining in the $1.53 range, but down to Manitoba, $1.33 to $1.36, because of course they no longer have provincial sales taxes. Ontario, you're looking at $1.48 to $1.50 by this time next week. Quebec, 10 cents more than that. And of course, Atlantic Canada will probably see the first time in several weeks where they've actually seen a decrease in gasoline prices. But watch diesel, because there's no holding it back. These are fundamentals. We've seen a significant draw in crude, diesel, and oil inventories in the Department of Energy's U.S. inventory report. And that means that we're going to continue to see upward pressure, especially on diesel, perhaps with gasoline, as refiners figure out that they're not making enough money producing gasoline, as traders continue to trash the value. What that means is that going forward, with the Canadian dollar not showing any sign of strength, and certainly if the Bank of Canada drops interest rates 0.5 point, that could mean a further pressure on the Canadian dollar. The bottom line, I think, for everybody is, the extent to which government interference, blocking pipelines, and of course, carbon taxes affects Canadians. In my province of Ontario, $1.52. If we didn't have a carbon tax, we didn't have a second carbon tax, a clean fuel standard, and we had Canadian dollar trading at par as it used to do in the days when we could sell more oil, you'd be paying $1.10, no more than that, for a liter of gasoline. It's something to put in your pipe when you think that energy prices mean nothing. We've been pushing energy affordability for quite some time. That's why we call it Canadians for Affordable Energy. Anybody who denies it has to look at the cost of living getting way out of control and inflation being much higher than expected. It all comes back to energy. Cheaper, more reliable energy is the source to our Canadian prosperity, and it continues to make Canadians happier when they see prices drop, as they should. That's it for this week. Teresa, we'll see you next week.
Thanks for that, Dan. Again, that was Dan McTeague, President of Canadians for Affordable Energy.